In today's video, we discuss everything to do with the stock, crypto, and commodities markets right now in what is setting up to be one of the biggest news events over the next 24-hour period. We just had Microsoft announce results. The market is not happy, and the dead cat bounce is coming true. So we're now going back down to support ahead of this big news. There's a lot going on and a lot to discuss. Stay tuned, everybody. We're going through it all together right now. See you soon. So it's the 25th of January, 2022, and this is our market recap daily show. If you like talking about markets, whether they're crypto, stocks, or commodities, please remember to subscribe and smash that like button, guys. We're on the road to 100K, and that's thanks to each and every one of you. Let's quickly talk about here the heat map of the S&P 500 large companies, though. It was all about growth getting smashed again. They were declining. Microsoft sold off into the close. Earnings are still out now. We'll talk about those in just a minute. Amazon selling low support for the first time into earnings. And then, of course, we had Tesla rallying, but then selling off. It was across the board. It was mostly growth. And you'll notice there are some green highlights. Things like energy were not necessarily underperforming. I will reiterate this again. This is not an across-the-board sell-off in the markets as much as people think. It is an attack on growth, hyper-growth, and valuation-based assets. Remember all those years ago, 2020, 2021, when everyone said valuations don't matter? They're starting to matter. The market's catching up and saying, whoa, 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 whoa. Hold back. We want to know that you can continue to do this. Let's talk about Microsoft. Microsoft's topped 50 billion in quarterly sales. It beat almost across the board, but the stock's down almost 5% after hours and it's smashing around the Nasdaq. Why is this? It's all coming down to, of course, the estimates moving forward. What is the guidance going to be for a stock like this? And if Microsoft, a very solid company, an amazing company with amazing growth, and it's had real backed up earnings per share growth since 2020 is falling, what does this mean for some of the other big FANG stocks, some of the other big stocks that we looked at in previous videos, ones with higher valuations like Apple? If they miss, it could really get scary. So remember, we don't believe we've found necessarily the base yet. Technical analysis and fundamentals along with each other and data will show us the level, and we're going to be looking for it. It's going to be tough, but we will do it together. Let's talk about the actual session itself, because it fell off after what we really called here as a community as a dead cat bounce. That's a huge rally or a face ripper style rally, followed by, of course, a sell-off in the next day. It was occurring. It looked like it found a base. It rallied back to almost being flat for the day and then sold off into the close. Now, it actually rallied partially into the close, but this was before the earnings result came out for Microsoft. After that, it fell right back down, and the Nasdaq is now down almost 4% after hours, as in 1.77 plus another 2% plus. If we think about the sectors that were doing well, it wasn't every sector that was selling off. Recently, in 2022, we've been positive here on the channel in a few sectors. One of those has, of course, been energy. The other one has been, yes, randomly jets. We've been relatively positive on that. And then, of course, gold. Even financials, which should benefit from higher interest rate environments, they're showing some bullish pressures. And then the rest of the market, the semiconductors, the software, the technology, it's all getting beaten down because the high valuations are starting to come home. Let's actually have a look at the year-to-date results so far. If you bought energy, you'd be up 17.66%. If you bought jets, yes, you'd be down. Same with gold, same with financials. But you certainly wouldn't be down as much as some of the other sectors. And I think this is an important factor when we look at markets. Not all things are equal. And again, it's not a super broad-based sell-off as much as people think. It's very specific sectors that are getting hit the most. Let's talk about earnings. Microsoft, that was the big first one. That's sending real shockwaves through the rest of the market. Let's see what the guidance says, because of course the guidance is key here with all these companies. We have Boeing coming out before the open on Wednesday. Tesla after the close. But in between here, lodged in between, is the Fed and the FOMC meeting. Remember, the Fed announcements, 2 p.m. at New York time, 2:30 p.m. press conference. These are times that you should be watching in the market. An incredibly, incredibly important time. One of the biggest news events that we're going to see in 2022, and hopefully some stability is brought across by the Fed. It is not the Fed's interest to crash the markets. They are trying to support it, but at the same time, they're trying to deal with an inflation problem. Let's see how Jerome and everybody on the board is able to deal with that. MasterCard before the open here Thursday, McDonald's, and then the one that I'm getting a little bit scared for, Apple. And I want to know what your opinion is as a community down below. So let me know, do you think Apple is worrying into earnings? It's one of the highest PE stocks in the FANG. It's being traded at well over 30 PE right now, and it has to beat expectations and smash them. We know that Microsoft already beat and it went down. What do you think about Apple? As this is the largest company in the market, it can really hurt sentiment both ways. Speaking of sentiment, let's just quickly bring up a couple of stats. I know a lot of you are getting sick of this, but we do need to bring it up for new viewers. Just remember that while interest rate hikes can cause instability, in general, the overall medium to longer term picture, if you are an investor, is still positive. Midterm election years often can have quite large volatility sell-offs as well, but the next year can provide some really good clarity in the markets. That's a 100% win rate in the next year in terms of across the board. We also see increased volatility coming into the March periods, why we think we might be seeing a bit of sideways action, not necessarily the V shape that everybody expects. And our community, we did again poll you guys. You all came back. I think it was 70-something% of people do not believe in a V-shaped recovery off this crash or correction or whatever we want to call it. Technology sector does tend to have some weakness here, seasonality with the start of the year, but then has some amazing gains. So imagine if we see the right technical setups, the right accumulation bases, and we're going to be waiting for these as a community coming into that March-April period. It could be a fantastic year for investors at the right price. Let's get into the technical analysis though and discuss a few things. So I think to really see a bottom in the markets, we need a few things to occur. One of those is, of course, we need the VIX to show some form of resistance hit or some form of incredible spiking power. And that is what we've got. We've got basically the first step of a potential recovery. Now, this is obviously potential and we need to see the price action come along with it. But the VIX went bonkers. It went all the way upwards of 40. That's a high VIX reading during any time. I know we go over here and you say, but oh, look, it went above 70. It's done it before. Very rare, incredible fear. Most times when you start to see these huge long wicks on the VIX, you've kind of put in the highest level of volatility that you're going to see. Doesn't mean the lowest point in the market, but certainly a high level of volatility. So the VIX is showing instability. It's going up, down, and all around, very volatile ahead of the uncertainty, of course, with the Fed. Then we look over to the US 10-year. Now, for the market to probably start to recover, we need the US 10-year to stabilize. Now, if we're looking at this from a price action standpoint, it kind of looks like it wants to go further long. You've got wick rejections coming off this 1.73 base. We're at 1.776, and we've often estimated that we might be able to get to a 1.95. And while it's going to knock around growth stocks right now, the longer term ramifications to growth may not be as bad as everybody is making out. That's an important fact. They may not be as bad. Remember, trading and investing, totally different thing, and people need to be always on top of that. So let's move over from this one. We want this to technically decline and that to be a good signal for us that we've found a base. So we'd like to see, of course, the 10-year go down. Let's move over to gold and some of the hedge or assets. Commodities still holding up amazingly well. US oil, which we won't be going into deep dive today for, has still been holding strong. We've been quite bullish on energy in general, 85.17 per barrel. If we move over to gold, that 1830 break is holding strong. So for people that have been following the channel for a little while, that found that 1830 and that might have liked this level with their own systems, guess what? They're not actually down. You might think, oh, but this is a very small move percentage-wise. What of it? Well, the thing about gold is that a lot of people, of course, trade it, and they trade it on CFDs, leverage, that kind of stuff. So with the correct risk management, that's important. Coming into the Fed announcement, it's going to be risky. As we know, gold will be pushed around a lot depending on that. And that is going to be one of the biggest issues. But yes, strong price action here. We've thought about it for a while. 1870 is the next zone that we'd like it to get to. And if you go down to the smaller time frames, we got a lot of confirmations here off that previous resistance becoming support, huge buy wicks, really good trading here. Congrats to people that have been in that. Not too bad. At least it's held up against the rest. To move over to Tesla. So Tesla, we're very close to the announcement. 24 hours from now? Not only will we know what the Fed's doing, but we'll know whether Tesla has smashed expectations and, of course, held its trend line and held its support. Very big volatility. Highly likely that Tesla is going to find a big swing in the next session. It doesn't seem like it's going to just move 2%. The options are starting to predict some pretty large swings here. So we have 900 post-market, 905. This is exactly where we expect the first level of support. Of course, we have our community trend line here that all of us have been watching for some time. It was a great buy the dip in the previous dead cat rally or face ripper rally that we had there. But now we move to a zone where we're at a key support resistance. Earnings is everything. It is not a technical trade right now. You are basically just hoping that the market can hold true. And a lot of you have very positive expectations for this. Is everybody too excited? I don't know. I think they will beat. The question is whether the market even likes that or not. Watch the trend line. We'll come back in 24 to 48 hours, get an idea of clarity, and then we can make better informed trade decisions. But investors would like this level, but they're obviously waiting for that news result. Speaking of news results, it was the same for Microsoft. Coming into the announcement, we basically were holding our glorious trend line here, the daily 200, the green line. Everything looked like it was just coming down to the fundamental result. And guess what? After hours, it's pretty brutal. Post-market 274, that takes us to a new low, even off the wick buy from the previous session. Huge volume coming through here on Microsoft. Not a great sign for the stock. It's now down over 20%. So technically Microsoft has just entered, I guess you would call, the bear market from a just stock perspective, not obviously a bear market overall. And it's declining at this stage. I think it's a great company. It's surprising that the market hates it so much at the moment, but this is the type of fear that's coming through. The Fed must give certainty on Wednesday session. Otherwise, if we have a miss on Apple, we really could be seeing new lows. And I think that's why we have to be reactive here to the base formations on indices and then making better decisions. Investors pick their levels, traders wait for confirmation. That's the big difference. Speaking of Apple, long leg doji on the candle here. We have a wick rejection. We have a long leg doji. That is a high, a low, an open, and a close at the same level. It's tough to really guess exactly where it's going. We've often theorized our trend line down the bottom, our 152 to 148 range, which is an area that I have set. So a lot of you might have something similar to this with a rectangle. I'm not necessarily confident in Apple's current valuations. And I've said this for a while. Even though we were trading it bullish over here, it got very expensive on a PE ratio. And remember, Apple can be valued PE-wise. It started to run ahead of earnings. It's been disappointing. If you took all of the earnings before, let's just go through some of them. Earnings sideways, then bullish. Earnings sideways. Earnings decline, earnings decline, earnings decline. So it has had a history of beating expectations, yet still being a buy the rumor, sell the fact. This time it's a sell the rumor. Will it even be buy the fact? We'll find out very, very soon. Thursday after the close, remember. ARK, a lot of people wanted me to cover this again. I think the only thing I'll bring up here is ARK has continued to decline. We all know this. It's also found resistance at the 20 moving average on the sell-off. We are still underneath the 20. We've found some buying pressure, obviously huge volume transactions going on here. But the big thing is until it's above the 20 and until we see some form of base, whether that be a double bottom, a lightning bolt, some form of recovery and above the 20, I'm not that interested in it. Now, you might say, oh, but you're going to miss out if it comes up, so be it. If I'd bought it all the way down, I'd be down a lot more money on that, wouldn't you? It's downwards just off this last run of 48%. And to clarify where it's at, just to put it in perspective, here are the pre-pandemic highs. 24th of Feb 2020, we are at $60. We are now seeing a low as 64. And remember, Tesla's the biggest holding in this portfolio. So most of the stocks in this portfolio are down underneath their 2020 highs. It's pretty crazy how much the market has truly turned around here for growth and hyper stocks. So ARK, we don't know if the base has been formed yet. At this stage, we have almost a long leg doji for the weekly, and we'll come back and check that out over the next couple of days. Don't FOMO. It's one of the things that people always fall into the trap with. I'm sure a few of you have FOMO'd buying the dip so far in the markets and not done so with a longer term strategy. Let's move over to the indices. We've got IWM to start off with here. We've talked about the Wyckoff distribution. Now, I had some questions that were coming in. They were like, Tom, does Wyckoff distribution mean to the short side? Yes. So this is effectively Wyckoff distribution. We have our max pain breakout here and obviously the break underneath. The problem with this is that if we do get rallies, let's say we rally to a 210, 209 area, what do we expect to happen here for IWM, the small caps? We expect sellers to come in. So we don't think that we're going to just get this V-shaped style recovery where it just goes all the way back up to the peak. And that's because this is the real deal, this type of pattern. It's showing weakness in the small companies. We've seen that initially sell off. It has rallied a few times, but just remember there is still an expectation of potential new lows. So we're going to continuously watch IWM, the Russell, as closely as possible to get an idea of the real story in the smaller stocks in the economy here. High, low, long leg doji on this candle. I think it's better to jump over to the Nasdaq as it's showing very similar closure results. Long leg doji here, but the SPX shows the best. So we had the dead cat bounce rally. We've sold off bound down to the lows. Possibly we even sell further and test these lows ahead of the Fed. So the fear is real in the market. Obviously, Microsoft is kind of driving that. Sentiment is terrible. I haven't seen sentiment this bad from the retail community and just in general. I'm seeing people hedge portfolios fully. I'm seeing people that are, short dated or long dated hedges, seeing people selling their entire stock portfolios, seeing people make all sorts of crazy moves that maybe aren't thought out necessarily through their entire portfolio. Like a lot of people hedge some things, but they hedge it based on maybe this concept of, okay, I want to hedge it and buy more. I want to sell a portion or maybe just hedge a portion. These are across the board, big decisions that are being made here. So if we go down to these lows again ahead of the Fed, we know that it's pretty much all on the Fed to support the market. The price action is showing us fear is there. Let's just move over to the futures because you'll get a better idea of how low we've really gone after market. So here is our bullish hammer. We got no follow through, which realistically says that's a face ripper rally. That's a dead cat bounce. Nothing good happened from it. Then we get that sell off, which we certainly thought would occur because of the dead cat rally or the dead cat bounce. And then we come back down to support. It is not unheard of for us to do this. Again, we go through history. Previous huge supports, a retest occurred. Previous huge supports, a retest occurred. It bounced, it stayed within a range, and then it sold underneath that range back in. Remember, this is a common thing that happens with markets. They come back and retest the zone and then really clarify whether they want to. And whether you want to buy exactly here is up to you. But when you get these types of things like double bottoms, that becomes your clarity to go, okay, cool, we can trade this long. Okay, cool, we can make better informed decisions. It's all about getting that clarity. And you generally get that by being patient and not having the FOMO in the markets. These are huge levels. We know, of course, they're coming up to an important news announcement. We can see that 14,000 level. And even though it's slightly underneath that, that's still a big technical zone. And we'll be watching the Nasdaq very closely over the next 24 hours. The S&P 500, the daily close says it all. Indecision after huge rally. Bullish hammer, sure. No follow through, absolutely. We didn't get any. Daily 200 also acting as a bit of resistance here. So for buyers, you'd be really looking for it above this zone. The reason why is because that would show that the low's been tested. It would show this follow through and it's got it back above a very key moving average. Long leg doji, high, low, open, close, indecision. The market's telling us, hey, look, guys, we have no idea what's going on. We don't even know where we want to go next yet. But we'll give you clarity when we do. If we make a new low, it's on. I mean, could the low go all the way to 3,800? That's where we've kind of figured is the next big zone. And the reason why that is because it makes sense to most of these types of big bearish kind of bets that are being placed. 20% down. It's very possible underneath these lows. That's how important it becomes. We don't know that's going to happen. Let's get the clarity from the Fed, then we can start really figuring out the trading systems. The one thing we were sure of is once we got through the 20, we were going to go to the 50. That's very common, incredibly likely, high statistical chance. So it's all about picking your statistics and all about picking those levels. So at this stage, we're just waiting for that clarity. Let's move over to the futures just quickly to get a bit of an idea of how low it really has gone after hours, after the Microsoft report. We've come down, tested the 4,300, a lot of puts sitting on that zone, and we've found some buying pressure in the futures. So again, ahead of the Fed, we're going to get some type of clarity. Let's move over to the SPY. Long leg doji, as we know, we only bring up the SPY to get that 434 so we can have a look at the options, and the options are coming thick and fast for the Friday expiration. We've got 430, some puts being placed there. We've got the 420 strike, huge amounts of puts obviously being placed there, and then around that 400, a massive load of puts. So people are starting to place bearish bets. There was a lot of calls entered into the market today as well. It's starting to even up. It's not getting that much information from the options market, really. It's clearly divided between buyers and sellers, and everyone is confused about what they want to do next. We need that clarity, and the clarity is not showing itself quite yet on the markets, but we'll be here together when it does. Let's move over to Bitcoin. It's still looking much better than the rest of the markets. It held above 36,500. It's consolidating above this area. The crypto market's actually moving a little bit with the Nasdaq, and it's holding better than it was. It was falling with the Nasdaq. Now it's consolidated and it's holding around this zone. Be careful ahead of the Fed. Bitcoin and crypto will most likely move as well. It's not really the time to be necessarily trading this market. If you're investing and you've got a plan, fair enough. We have a high, we have a bullish hammer, we have a long leg doji forming here, and we know that high is around 37,620. So if that gets breached, next stop you would think is around 40,000 for Bitcoin, and a bullish kind of move. Something to watch over the next 24 hours. Similar to Ethereum, the rally has not been as strong as the Bitcoin rally, and this is across most of the altcoins. Everyone's going back to the king, or the big one, being Bitcoin, and people are starting to feel a little bit fearful on the rest of the coins. A lot of the rallies have not been as big. KSM, DOT, Matic, they're just not coming back as fast as you would expect. Let's move over to the calendar. FOMC statement, as we said, 2 p.m. here, 2:30 p.m. FOMC press conference. This is it. Let's find out what happens here. Tesla after the close, and then Apple on the Thursday session. So big news there. Just a quick bit of an announcement. I will unfortunately be away for the Wednesday and Thursday sessions. I'll still make a video after the Fed, but it will be done on the laptop. Do apologize for this. We'll be coming back with our normal shows all over the weekend. And of course, we'll be covering the market as much as we can over the next weeks and months. We'll be there with you every step of the way. Thanks so much for watching. Please subscribe, and of course, smash the like button if you enjoy our content. See you next time, and good luck out there. Hopefully, you can make the most of the opportunity that awaits at some point. See you soon, everybody. Bye for now.